So heading into April, the Federal Reserve really is the central bank to watch, because the other major G10 FX influencing central banks, such as the ECB and the Bank of Japan, have more or less already played their cards, and we're not likely to see further drastic market-moving action from either of those two in the immediate future. So the Federal Reserve has been issuing dot plot forecasts for what members think interest rates will look like in the future for quite some time. And for the last year or so, the trend on these forecasts has been very clearly downwards. Now, in the latest FOMC meeting, these dot plots indicated that the majority of members actually saw interest rates at 1% or less at the end of this year. So the question is really, will these expectations keep getting revised further and further downwards until we don't end up with any interest rate hikes this year, or will the hawks in the FOMC prevail and manage to get the central bank to lift its interest rates further, perhaps even in the immediate future? So we've certainly seen some members of the FOMC argue that the conditions in the US economy justify immediate rate hikes. Last week, for example, we had 3 FOMC members say that April and June were live meetings that could see the Fed raise interest rates. On the other hand, Janet Yellen herself yesterday argued that she preferred a more gradual approach that would need to be justified by the actual hard data, in particular core inflation rising closer to its target and therefore justifying further rate hikes. Coming into April, it'll be interesting to see how the data actually supports either of these two arguments. So we have this Friday's very important non-farm payrolls release. In particular, average earnings growth will be an interesting data point to watch there because it feeds directly into inflation and cost pressure. Later in the month, we'll see the actual headline CPI release, and next week we've got the FOMC minutes. Now these are going to be interesting because we did see another massive downgrade in interest rate expectations from members of the FOMC at the last meeting. So the minutes will reveal how the discussion went and really what side, the hawks or the doves, is currently carrying the momentum of the dialogue in the FOMC.